Okay, let's dig into this. We are doing a deep dive today on a crypto that's, well, it's getting some buzz. Onyxcoin or XCN.
That's right. And for this, we've, gathered quite a stack of sources. We're looking at articles from Changelly, the OneSafe blog, stealthex.io, even some takes from a YouTube finance channel.
All focused on XCN, its market situation around early June 2025, what might be influencing it, and those price predictions everyone loves to talk about.
So the mission really is to unpack all this. What's actually driving the attention? What are the different analysts saying? Because, spoiler, they don't always agree.
Exactly. And what can you, our listener, kind of glean from this mix of info to, get a clearer picture of Onyxcoin?
It's about finding those key nuggets, the surprising bits, without you having to read through, everything.
Perfect. Okay, let's dive in. First things first. Based on these sources, what exactly is Onyxcoin, XCN, and what did its market snapshot look like in, say, early June?
Right. So the sources describe XCN as the coin for the Onyx blockchain. And Onyx itself, they call it a layer 3 protocol. It's built on top of some big names: Ethereum, Base, Arbitrum.
Layer 3. Okay, so like an additional layer on top of the existing ones. What's its purpose?
Yeah, think of it like that. Its main goal, according to what we're seeing here, is to be this cloud blockchain infrastructure, specifically designed to help companies create financial service solutions.
Interesting niche. Financial services on the blockchain.
And it's changed over time, too. Apparently, it started more with supporting Web3 infrastructure generally, but then expanded. Now it includes smart contracts, governance tools, dApp support, the works.
And was there a name change?
Oh, yeah, good point. It used to be CHN, rebranded to XCN at some point. That's mentioned.
Okay, so it's targeting enterprise finance in Web3 using established layers.
Got it.
Yeah.
Now, the numbers. Early June 2025, where was the price sitting?
So looking across the sources from around then, the price was generally bouncing around, let's see, 0.015 to 0.01 cent. Changelly on June 6th had 0.0153.
Blockchain Magazine, June 3rd, said 0.015 to 0.016 cents. StealthyX, though, this was from late April, had it a bit higher, 1.0187. So maybe a slight dip leading into June.
Possibly, yeah. And market cap, was that fairly stable in the June sources?
Yeah, that seemed more consistent. Around $499 million, up to maybe $522 million. Those numbers lined up reasonably well between the sources from early June.
Okay, but then we get to circulating supply. And, this is where things get a bit weird in the sources we looked at.
Yeah. A bit weird's putting it mildly. This is where you see a massive difference. Changelly's data, June 6th, says circulating supply is around 32.6 billion XCN.
32.6 billion, okay.
But the Blockchain Magazine source, just 3 days earlier on June 3rd, lists it as roughly 3.5 billion XCN.
Oh, hold on. Did you say 32.6 billion versus 3.5 billion? That's a difference of like 29 billion tokens? How?
Exactly. Honestly, it's baffling, and the sources, they don't explain it. It's not like one clarifies its total supply versus circulating. They both say circulating supply.
That's kind of crazy.
It really is, and it's probably the single biggest red flag or, point of caution from just comparing these sources directly. Always double check fundamental data like that.
Absolutely. Wow. Okay, lesson learned there. Moving past that huge discrepancy for a second, where did XCN rank overall in the crypto world, according to these sources?
It was sitting around rank 110, maybe 111. So, not top 10, but definitely not obscure either. It's in that range where plenty of people are watching it.
Makes sense. And what about its recent performance just before that early June snapshot? Any momentum?
Yeah, there seemed to be some positive movement. Changelly pointed out it was up just over 4% in the last 7 days before June 6th, and pretty significantly up almost 50% over the previous month.
Wow, nearly 50% in a month.
Yeah, quite a run. Although just on that specific day, June 6th, it was actually down a bit, like nearly 3% in 24 hours. So, typical crypto volatility, but the trend leading up was strong.
Okay, so we've got the basics, the market picture, and a huge question mark over circulating supply. What factors did these sources highlight as, the main drivers influencing XCN?
Right. They point to a few key areas. First off, stuff happening within the Onyx project itself, developments, updates, that kind of thing.
Like what? Any specific examples?
Yeah, a really prominent one mentioned is this OIP-56 update. It passed in May 2025, just before a snapshot. And what it did was introduce gas-free voting for governance.
Gas-free voting. So no transaction fees to vote on proposals.
Exactly. And the sources frame this as, a strategic move. The idea is to boost user engagement, make governance more accessible. If it doesn't cost you anything to vote,
more people might actually do it. Yeah, that makes sense.
Right. And this, along with other things they mentioned, like Onyx AI initiatives and Onyx points rewards, it's all painted as part of this bigger push to get more activity happening in the ecosystem.
Trying to build real utility, real participation.
Pretty much. Positioning it with real-world applications. Moving towards, as one source put it, a new stage of decentralized governance. So that internal stuff is seen as potentially quite important.
Okay, internal drivers. What about the outside world? Regulation always comes up with crypto.
Oh, for sure. And the sources talk about this this kind of two-sided coin with regulation. On one hand, clearer, stricter rules, maybe like in traditional finance, could actually bring more stability, more trust.
Which could be good, especially if they're targeting businesses.
Could be, but the flip side they mention is that those same rules could also end up stifling innovation, maybe hurting things like DeFi or blockchain interoperability, which could obviously hurt adoption.
So it's a watch and wait situation on the regulatory front.
Basically, yeah. The takeaway from the sources is keep a close eye on regulatory news. It's crucial for the long-term picture.
And then there's just the wider economy, right? Macroeconomics.
Absolutely. Huge factor. The sources hit on the usual suspects: inflation, interest rates. The drill rising inflation might make people look at crypto
as an alternative store of value, maybe.
Right. But then if central banks hike interest rates to fight that inflation, suddenly traditional assets look more appealing and money might flow out of crypto.
It's a constant balancing act.
It really is. And general economic stability plays a role too. If things feel unstable globally, investors often run to perceived safety, which usually isn't altcoins.
Usually, yeah.
Although some sources kind of hint at the opposite. If traditional markets get really messy, maybe crypto starts looking like an alternative haven for some. It's complex.
Definitely. Anything else on the macro side?
Institutional involvement is the other big one mentioned. If big players, institutions start using the Onyx platform, that could obviously add a lot of legitimacy and stability.
Okay, so we have internal tech, regulation uncertainty, global economics. What about the charts? Did the sources look at technical indicators for XCN?
They did touch on some technicals, yeah. Though some data points were a bit older, like one source from February 26th mentioned the RSI, the Relative Strength Index, was at 43.
Which is kind of neutral, maybe slightly weak, below 50.
Exactly. Suggests buyers weren't exactly piling in at that moment back in February. But interestingly, the MC, moving average convergence divergence, from that same source was apparently hinting at possible bullish movement soon.
Okay. What about closer to June?
Well, the YouTube source, looking at things on June 6th, pointed out what they called a massive bullish divergence.
Bullish divergence. Explain that a bit.
So that's typically when the price is making lower lows, maybe dipping, but an indicator like the MACD or RSI is actually making higher lows. It suggests that the downward momentum is weakening, selling pressure might be running out. It's often seen as a sign a reversal could be coming.
Ah, okay. So a potentially positive sign brewing on the charts. Any specific patterns mentioned?
Yeah, that same YouTube source talked about a falling wedge pattern. Basically, the price action was getting squeezed between two downward sloping lines that were converging.
Like a triangle pointing down and slightly sideways.
Kinda, yeah. And the price was apparently testing the upper line of that wedge. Breaking out above that line is usually seen as a bullish signal by technical analysts.
So technically, some potentially positive signs were there, but maybe needing confirmation.
Exactly. And one source explicitly mentioned the missing piece for a really strong bullish move. More trading volume. You need that volume to confirm a breakout, otherwise it might just fizzle out.
Right, volume confirms conviction. Okay, let's focus on that near-term picture then. Around early June 2025, what did the sources suggest was immediately ahead?
Well, the price itself was described as being in consolidation mode, just kind of stuck, trading sideways in a range between roughly 0.0165s on the low end and 0.0212 on the high end.
So chopping around, basically. Yeah. Reflecting that uncertainty we talked about.
That's how the sources interpreted it, yeah. Mixed signals leading to stagnation. And technically, that range was key.
How so?
Well, the analysis suggested that breaking above that 0.0212 resistance could open the door to targets like 0.0237, maybe even $0.0300. But if it lost support at 0.0165, the next stop could be down near 0.015 census.
So those levels were the ones to watch for the next immediate move. Were there any specific events coming up that the sources flagged as important?
Yes, the YouTube source from June 6 was very focused on two big things happening basically right then. First, the Fed meeting minutes were due out later that same day.
Minutes from which meeting?
From their March 1920 meeting, so a bit dated but still relevant.
Why were old minutes still relevant in June?
Because analysts were going to be combing through them for any hints about where the committee members stood on interest rates, especially planned cuts for 2025. There was apparently some market chatter that maybe more than the expected 3 cuts were coming.
Looking for subtle shifts in tone or consensus.
Exactly. If the minutes sounded more supportive of quicker or deeper cuts, that could be seen as really bullish for markets, crypto included.
Did the source hazard a guess on what the minutes would show?
Yeah, interestingly, that specific source guessed they might actually be slightly bearish.
Ooh, why?
Their logic was that the March meeting happened before some newer economic data, like news about tariffs, and the Fed's tone back then was pretty cautious. So the minutes reflecting that older caution might pour a little cold water on recent optimism.
Okay. That's an interesting angle. What was the second event?
Inflation data. Due out the very next day, June 7th, and that's always huge.
Because it directly feeds into the Fed's decisions.
Precisely. Lower than expected inflation, generally bullish, gives the Fed room to ease up. Higher than expected, bearish, means rates might stay high. It's a massive data point.
Okay, so the near term in early June felt pretty dependent on both the technical picture, that range, that wedge, and these major economic releases.
Got it. Now let's zoom out the long-term predictions. What did the sources say about 2025 and maybe even further out?
Okay, yeah, this is where you really see the opinions just scatter. The range is, well, it's vast. And definitely remember, these are forecasts based on data and analysis at that time. Things change fast. Understood. So give us the spread for 2025. What were they predicting?
All right, for 2025, Changelly's table data pointed to an average price around 0.00240, so less than a cent.
Okay, quite low.
Then you have StealthEX from April, predicting 0.004 cents for 2025.
4 cents. Okay, much higher.
Then OneSafe's February FAQ mentioned a 5-year outlook suggesting it could probably rise up to 0.000589941, so back down near half a cent over 5 years.
So we're already seeing numbers like a quarter cent, a half a cent, 4 cents.
And then, then there's the one cited in Blockchain magazine. They mention a popular analyst forecasting a potential rise to 0.075 cents in 2025.
75 cents in 2025.
Yep, which, as the source notes, would imply a market cap around $23 billion.
Okay, I have to pause there. We have predictions for the same year ranging from $0.000024 to $0.75. That's not just a difference. That's a completely different universe of outcomes. How is that even possible?
It's kind of mind-blowing, isn't it? It really throws into sharp relief how different the models and assumptions must be. Some are maybe purely technical, some might weigh fundamentals differently, maybe some are assuming massive adoption that others aren't. Who knows?
It certainly tells you to take any single prediction with a huge grain of salt. Wow.
Absolutely. It's the definition of uncertainty in forecasting, especially in crypto.
Did any sources dare to go even further out, like 2030? Beyond.
Changelly did. Their table data shows this very gradual, steady climb over many years. Like for 2030, their average prediction is around 0.01322.
Okay, so just over a cent by 2030 in their view.
And they go way out, average around 70 cents by 2040, maybe $1.50s by 2050. A very long, slow grind upwards in their model.
So interestingly, their 2040 prediction lands near that other analyst's 2025 prediction. But okay, a slow climb. How does that compare?
Well, contrast Changelly's 2030 average of 0.0132 with StealthEX's prediction for 2030, which was $2.20.
$2.20 versus about 1 cent.
Yeah. Again, just radically different outlooks for the same time frame. It's almost hard to reconcile.
It really is. Did any source give a basis for some of the higher, maybe medium-term targets?
The YouTube source did mention using Fibonacci levels. They suggested XCN has historically reacted to these levels. Based on that, they threw out some targets for 2025 around 18 cents, which lines up near the old all-time high and maybe even 32 cents, hitting a key Fibonacci retracement level.
Okay, so there are technical arguments for higher prices too, but are there caveats?
Oh, yeah. That source was very clear. Hitting those kinds of levels, 18 cents, 32 cents, probably needs a really frothy market overall. They literally mentioned needing greed and extreme greed, needing Bitcoin and maybe XRP to be hitting new all-time highs.
So XCN needs the whole crypto market to be in a major bull run to reach those heights.
That was their take, yeah. That it needs that rising tide for it to really flourish to that extent. Project specifics alone might not be enough.
Makes sense. So given this wild range of predictions and necessary conditions, it's really no shock that the sources say analyst opinions are divided.
Not surprising at all. Blockchain magazine explicitly said opinions are split. Some analysts apparently were advising to sell XCN.
Why? What were their concerns?
Reportedly, concerns about fundamentals, maybe a feeling that the price was ahead of the actual network activity or utility, of valuation concern, essentially.
A more bearish fundamental take.
Right. But then you have other analysts looking at the same project, the same recent updates, OIP-56 gas-free voting, the AI plans, the rewards, and seeing those as potential catalysts.
Seeing them as positive signs.
Yeah, or even as a potential lifeline, as one source put it, something that could actually boost utility, attract users, regain momentum, and maybe justify the price or even push it higher.
Fascinating how the same news can be interpreted so differently. One sees a gimmick, another sees a catalyst. So with all this volatility, these conflicting views, what advice did the sources offer for people trying to navigate this?
The OneSafe article laid out some pretty standard but always useful strategies for volatile markets. First, diversification. Don't put all your eggs in the XCN basket or any single basket.
That's simple.
Second, risk management. Have a plan, maybe use stop losses or hedging if that's your thing. Protect your capital. Third, market monitoring. Stay plugged in, keep up with trends, news, and especially those regulatory developments we talked about.
Crucial.
Fourth, basic security measures. Protect your crypto holdings.
Always important.
And fifth, try to focus on fundamentals for the long haul. Look past the daily noise at the tech, the team, the actual use case. Does it have long-term potential?
Good reminders for any investment, really. Okay, let's try to tie this all together. What are the main takeaways we've pulled from this deep dive into the sources on Onyxcoin from early June 2025?
Okay, so we saw XCN was kind of consolidating in a range back then. Its price seemed influenced by a mix of its own internal updates, like that OIP-56 governance change and the AI stuff.
Balanced against those big external forces, the economy, potential regulation, and of course, technical chart patterns signaling potential short-term moves.
Exactly. And maybe the most striking takeaway is just how wildly different the price predictions were, both short and long-term. Seeing forecasts for the same year differ by like 300 times really hammers home the uncertainty.
Yeah, that prediction disparity was something else. But despite that uncertainty, some analysts did see potential, right?
Yes, definitely. Those recent updates were seen by some as real potential catalysts if they actually delivered on increasing utility and community engagement. And technically, there were some hints, like that bullish divergence, suggesting maybe selling pressure was easing up.
Though the need for more volume was a caveat there.
Right, and everyone was watching those imminent economic releases, the Fed minutes, and inflation data as key short-term drivers that could easily sway the market.
So macro could trump micro in the short term.
Often does.
Okay, so we've covered the landscape for XCN, as seen in early June 25. Its tech, market position, the incredibly varied predictions, the internal updates like gas-free voting, the external pressures, even chart analysis. We've seen analysts looking at the same thing and coming to totally opposite conclusions.
It paints a picture that's complex, definitely, and full of contradictions at times based on these sources.
It really does, which leaves us, and you, the listener, with a final thought to chew on. When you see this kind of expert disagreement, these vastly different forecasts, and you know how powerful things like global economics and overall market sentiment are, how do you decide how much importance to give to specific project developments like a new governance feature or an AI plan compared to those huge, often overwhelming external forces when you're trying to figure out the real potential of something like Onyxcoin?